Well, the markets are open. Shall we explore what they are doing? Okay, well, I'm glad you agree. Let's take a look at corn here right off the bat. Our quotes are provided by Bar Chart, and the corn market shows that we are just not doing much of anything. It's kind of waiting for the train to go by. We have the September corn just 1/4 cent higher. Whoops, now I scared that away. Now it's back to unchanged at 602 1/4. And December corn down 1/4 cent at 606. Wow, that is a giant yawn festival on the open on the corn. Let's look at soybeans. What are they doing? Well, they have decided to move, but they have decided to move downward, even though we had 2 export sales reported this morning. We have September soybeans going down 11 cents at 14.50 1/4, and November beans down 17 3/4 at exactly $14, just sitting right on that benchmark right now. Over on the wheat in Chicago, we have nearby September down 6 3/4 this morning. We're at 7.75 3/4 in Kansas City. Here you have September down 7 at 8.53 1/4. And in Minneapolis, spring wheat trade today, we have September down 5 1/4 at 8.89. Well, I'm joined by Chris Swift of Swift Trading in Nashville. This appears to be one of those deals where the trade was buying on those rumors of China business yesterday, and well, it kind of sold off overnight, thinking that, well, it's going to be old news now. It sounds like maybe the weather forecasts have changed a little bit, too. What are you hearing, Chris?
You know, a little bit of everything, Marlin. It's a mixed bag of fundamentals out there, and we are going to probably try to move forward to this time next week when we get into the WASDE report, where some of these loose ends can be wrapped up. Generally, if the USDA is going to make some kind of adjustments, they will start in that August crop progress simply because they have enough information through pollination now. So I think that's some of it. And, you know, above $6 again in December corn, we'll grip 45 cents off the low that we made a couple of weeks ago. This is probably here or maybe even firming just a little bit into that report. Wouldn't surprise me a bit.
You know, something, Chris, that I haven't heard much, if any, talk about here lately. What about that humongous question mark that we had about a month and a half ago that we still don't know what the planted acreage is on corn? I mean, even if we do have tremendous yields in the northern part of the Corn Belt, we don't know how many acres we actually lost, if any, and maybe none. I don't know. But we still haven't heard anything on that, and I never hear that mentioned anymore.
Well, the rumor mill is very, very hot right now simply because of the Southeast and how hot and dry that we have been here. And ourselves, we are looking at trying to find ways to help our clients fix the basis. And although that's a very, very difficult situation right now, we're working, trying to find ways because we feel that we will be very deficit of corn in the Southeast coming up for the next year. And we use approximately 100% of all the corn that we grow down here locally for poultry and hobby farming.
Well, I have heard stories that the basis is totally different for old crop corn versus what they're figuring now for new crop delivery. Are you picking that up too or not?
Absolutely. People are having to shovel, take scoops and shovel the bins out just to try to get enough corn until we get this new crop in. And a lot of really better forecasters than myself will be able to take the first planted, first probably 30% planted, and then calculate forward when that would be harvested. And you're probably still another 30 to 35 days from the earliest corn being harvested.
Want to show our viewers and listeners here, too, what is something to keep an eye on and an ear out for as far as a potential impact here on the grain trade. Check out the U.S. dollar index today. Of course, we had the jobs data that came out and surprised everybody when it had way more jobs created last month than expected, about twice as many. And the U.S. dollar index right now has September futures 1,104 points higher on the day at 106.670. That's over 1,100 points higher, and that definitely adds a little pressure when it comes to trying to sell our goods overseas. We'll come back, and in a moment, we'll open up our livestock trade with help from Chris Swift right after this. Well, we're back with you. Thank you for joining us today, and we're talking with Chris Swift of Swift Trading. Now, he is based in Nashville. Now, let's take a look at our livestock trade, and we'll go to the live cattle board and see what the futures are doing. Just not much of anything here. A little bit weaker again. The October live cattle are down a dime. We're at 143.55. Just nothing going on. December down 22 cents at 149.67. Now, on the feeder cattle side, this is how things are opening up. They are about as quiet as what the live cattle market is, but here you're just kind of narrowly mixed. You have the nearbys a little bit firmer. It would seem to indicate maybe some slight bull spreading, maybe. The August up 27 cents, but September is up just 15. And then you go beyond that and everything is a little bit weaker, as much as 35 cents lower if you go way out to January. Now, on the lean hog trade today, you have October down 35 cents at 97.25, and you have December, February, and April about 10 to 15 cents lower, so not much going on there either. Chris, I hate to talk too loud here to wake up this livestock trade. It seems like it's really kind of in a coma this morning.
Boy, it is, and it has been most of the week. But we have seen the cattle markets open up and then pretty much die through the rest of the day. We know that open interest is probably some of the lowest that we've seen in the live cattle market in a long, long time, and we're all questioning now, what is the reason for it? And I think a combination of factors of the futures contract doesn't represent the way the bulk of cattle are sold anymore. And we just, with the vertical integrations going on and more of the big box chain stores participating in the entire portion of the production side of it, it tends to decrease the volatility just a little bit. So if we think about anything, it's maybe a smoothing out of the supply chains within the industry that's causing the lifelessness in the price movement.
On October live cattle, are we kind of hanging around a resistance level right now, or do we have a little ways to go yet?
Well, we keep bumping our head up against these highs up in here, but every time that we go up, we come back down seemingly about the same amount. So every now and then we'll advance and maybe close $1 higher on the week, but day in, day out, it's about as slow as you can imagine.
And by the same token, if you look at the lean hog chart here, they have continued their push higher, but it looks like they're maybe just taking a little bit of a breather before the weekend.
Yeah, the August is right in line with the lean hog index, and they expire next week, middle of next week. The other contract ones carrying significant discounts leaves a tremendous amount of risk to see, does the futures go up to the index, or does the index fall 30-some-odd dollars back down to where the futures are now? Anywhere in between, you're looking at a $15 to $20 spread that's going to have to converge in pretty quick fashion.
Wow, definitely need a helmet if you're going to work in that spread. That's for sure. Thanks for pointing that out. Chris, great stuff. Have a great weekend. Chris Swift of Swift Trading with us. So we're off and running, Janet, and we'll observe everything as we go through the day.